My name is Michael Duke, and this is the show where I analyze stocks that are interesting. So if you find that interesting, please consider liking the video, subscribing to the channel. A very busy couple of days that we've had here. I've had several companies in the portfolio or that I've covered previously release earnings either yesterday or today. I'm slowly making my way through them with a video. And then a few of them I would be writing articles as well. But now I want to talk about CME Group, ticker CME Group, of course, is a market maker that allows trading for futures and options on futures contracts worldwide. Has a significant market share, but greater than 90% in interest rate futures on bonds, particularly treasury bonds and U.S. bonds. So the idea we see here, here on Seeking Alpha, we see here that I wrote an article how to publish grading the stock a buy. I mean, this wasn't even a month ago. This is right before Liberation Day. Okay, a couple of days before Liberation Day. Graded the stock a buy. We see that it has modestly outperformed the S&P in that time. But the idea, very simple, a high yield toll booth on global financial volatility as investors scramble to hedge their portfolios or to speculate on interest rate volatility or commodity, or volatility in commodities that the asset light wide moat business model of a group like CME might be a winner throughout all of that, or at least outperform the market on a relative basis. So yesterday they released earnings, and I would like to review those on camera here. I've not reviewed them yet. I would like to review them on camera with my viewers here. Speaking of viewers, we are so close to 300 subscribers. The channel has grown quite a bit these last few months. Most of my videos might get 10 to 20 views. But I'm doing this because I can and because I like it. And hopefully my viewers out there are seeing value in this. So thank you to all those people who have subscribed to the channel. I appreciate you. I will continue to provide analysis. So anyways, let's take a look at the earnings report on the website. Let's navigate to investor relations here. This is great, but I also want the deck. Where's the deck? Show me the money. I bought a mouse, a gaming mouse. Right click is messed up for some reason. Okay, so we've got our commentary here, and we've got the press release. So first off, CME Group reports all-time record revenue, adjusted operating income, adjusted net income, and adjusted earnings per share for the first quarter. So, very simply put, the underlying business has never reported such strong numbers on an absolute basis. But let's take a look at the momentum here. So, revenue in the quarter, $1.6 billion, up 10% from the prior year quarter. Record average daily volume, 30 million contracts, with broad-based growth in every asset class. So revenue of 1.6 billion versus operating income of 1.1 billion. That's over 2/3 margin. That's over 65% margins. Net income being 956 million. Diluted earnings per common share were 262, 1048 a share versus our 263. Let's just calculate our forward multiple annualized on that. That's 24.65 times earnings annualized on that quarter. Pretty good. You see here the powers that be are estimating further growth throughout the year, translating to a slightly smaller forward multiple than we just calculated. On an adjusted basis, net income was $1 billion and diluted earnings per share were $2.80. So non-GAAP, our earnings per share was $2.80, which of course is much stronger. That is 1320, 263 divided by 13.2. That is 19.9 times earnings on the adjusted earnings per share. So that seems like a pretty good valuation that we're at now, but don't want to read too much into that. Terry Duffy, the group chairman and chief executive officer, said, and I quote, amid heightened economic uncertainty, CME Group operated with exceptional resilience as clients turned to our markets in record numbers to hedge business risks across asset classes. Just a side note there, these aren't just investors that are utilizing these platforms. I think it's probably a pretty easy misconception to think that it's hedge funds and financial institutions that are hedging big books of equities and bonds. And while that is the case, there are the companies like one that we talk about regularly is Hershey. Hershey, of course, makes chocolate, so they have a large amount of exposure to the cocoa price. So, of course, a company like that is going to hedge their commodity exposure. So, lots of companies in the market have exposure to commodities. They are customers as well for a company like CME Group. So, while there's nothing earth shattering about that information, and it is corporate speak, I think it does illustrate the value proposition of a company like CME, both to customers and to shareholders, being that the demand for their products increases when there's volatility in financial markets. So that is the thesis here, and these numbers do seem to reinforce that, at least some so far. Continuing on, this increased demand drove our Q1 average daily volume to a new high of 29.8 million contracts, generated record revenue, adjusted operating income, adjusted net income, and adjusted earnings per share. Commodities grew 19%, financials increased 12%, and our average daily volume outside the U.S. reached a new high of 8.8 million contracts, up 19% per year. Exceptional results, really. Looking ahead, we remain focused on providing the products, services, and efficiencies to benefit market participants as they navigate this risk always on environment. Well said. It very much is a risk always on. Now, of course, risk on means, in the financial sense, allocating capital to equities. But the way that I believe Mr. Duffy is referring to it here is very appropriate as well, as there's a lot of risks existing out there today, namely commodity inflation. I think is a big theme. We covered that in our video about Corteva a few days ago, in our article on Seeking Alpha about Corteva, where we upgraded that to a strong buy, given that the environment right now is very conducive to commodity inflation. It doesn't mean that it will happen. There's deflationary risks as borne out by the tariffs, but anytime supply chains get disrupted, it is a supply-driven shock, which might lead to commodity inflation. So that is very much lands with me and what I understand about markets today. That yes, there are a lot of risks and there's a lot of demand right now, common sense wise, for products that allow institutions to hedge their risks, whether they are market participants from a purely financial sense or from a commodity exposure risk. And we see that borne out in these numbers here, with commodities growing 19%. I think this ADV outside the U.S. number is very telling, because what's been the theme of the last few weeks, dollar down, oil down, bonds flat or down, equities down, gold up. So that indicates a modest amount of capital flight outside of United States assets, which paradoxically seems to benefit the ADV of CME. So very, very encouraging results given the way that things are going right now in the markets. Clearing and transaction fee revenue for the first quarter totaled $1.3 billion. The total average rate per contract was 68.6 cents, and then market data revenue totaled 195 million. Company had 1.6 billion in cash, including 200 million deposited with Fixed Income Clearing Corporation, which is included in other assets. 3.4 billion of debt. Company paid dividends of approximately 2.6 billion. Company has returned 28.6 billion to shareholders in the forms of dividends since the implementation of the variable dividend policy in early 2012. So let's take a look at the summary here. Some visuals here. We see blue charts equating to revenue, and then our dark blue being adjusted operating expense, and our earnings per share on an adjusted basis. Remember, that was $2.80 a share that we saw in the press release. So I'll tell you what I can visually see, although I don't know these numbers, they don't label them. It does appear that over the last 3 quarters, adjusted operating expenses either barely went up, or they were flat, or maybe even slightly went down in this quarter, whereas revenue has gone up sequentially every single quarter. So we actually do see that expenses went down slightly quarter over quarter because revenue was up 10%, but operating income up 14% and adjusted income up 12%. So that ADV of 29.8 million contracts up 13% year over year, and records across interest rates, equity indexes, agricultural and foreign exchange asset classes, and record quarterly non-U.S. ADV of 8.8 million contracts. That's what we just saw. Record ADV for the EMEA region up 20%, and record ADV for the APAC region, or Asia Pacific, up 20%. Just outstanding numbers here. Financials ADV increased 12%. All-time high of Treasury ADV of 9.2 million contracts. Look at this, record cryptocurrency ADV of 11.3 billion notional. Very interesting. Commodities ADV grew 19%, driving over 1/3 of total clearing and transaction fee revenue, up 15% year over year. Energy ADV up 20% year over year, and included quarterly record for Henry Hub natural gas futures and options. Very interesting. Agricultural ADV up 23%, driving record revenue up 25%. Wow. Not a lot to say there, just exceptionally strong financial results. Significant broad-based activity during the quarter helped to deliver all-time high revenue, as well as record operating income, net income, and diluted earnings per share on an adjusted basis. The record revenue was aided by the effectiveness of our volume tiers to help our customers cost-effectively manage their risk exposure in high volume times. Volume executed at these higher tiers remains very profitable, giving the operating leverage in our model, which brings down the average rate per contract. In other words, the more contracts that a customer enters, the fee per contract goes down for the customer, but each sequential contract does have higher margins as well. The higher volumes that we have, we save money on a unit economic basis as customers, and we make more money on a unit economic basis as the house, as CME. So very, very compelling looking results here. We see here year-over-year growth, clearing and transaction fee revenue mix, notably metals, still the smallest category here, up 11%. Agricultural up 25%. I think the environment right now is conducive to commodity inflation, in particular, commodity inputs, outputs, all and up the chain. So the fact that that saw the strongest year-over-year growth, I think, is very, very interesting and perhaps telling, although I don't want to read into it too much. And then we see the lowest volume increase, but the biggest category seemingly being interest rates, up 5% as well. So let's just see, here's a chart of the non-U.S. volumes. Very strong here, annual interest rates. FX, I think, again, a lot of the videos I've made the last few days, the last few weeks, I've been discussing repeatedly the outlook of FX being for what I believe through the end of the year, a weaker dollar and stronger foreign currencies, particularly the euro. So we do see as volatility increases, hedging increases, and there is almost a leveraged effect to that. We see that here. Euro futures increased 17%, Japanese yen 11%, Canadian dollar futures up 42%. One comment I want to make is, again, the title of our article here, High Yield Toll Booth on Global Financial Volatility, Earnings Call Insights from Seeking Alpha. CME Group sees record revenue and income amid global volatility. So while these financial results are very encouraging as a shareholder, they also are bad from the standpoint that with such explosive growth in certain hedging products, futures, options products, that's not necessarily a good thing in terms of the health of the market, because it does imply that vol is going up. Whether that's good or bad remains to be seen. However, we know that it's been an especially volatile quarter. The upcoming quarter, we don't even have, I assume that this is the quarter ending March 31st, right before Liberation Day. I expect, again, common sense, smooth brain thinking, I would think that volatility might even be greater in the upcoming second quarter numbers that we will see in 3 months. Okay, but don't want to speculate too much on this. WTI crude oil options ADV up 33%. Brent crude oil up 132%. Price of WTI crude rather decreased from 72.73 a barrel down into the high 50s. Metals ADV increased 8%. However, precious metals ADV up 16%. Options ADV grew 32%. Micro gold 114, micro silver 118, copper 153. Lots of volatility. Expect corn up 42%, wheat up 27%, soybean oil up 17%. Of course, we know Corteva exposed to all those things. Think about the Cortevas of the world hedging their exposure on that, because their prices are correlated to the prices of those goods, despite the fact they have pricing power on their branded seed portfolio. So livestock up. I don't see a single number here that is not up, and furthermore is not up in the double digits. Some things up in the triple digits. These numbers are blowing me away. The strong new client acquisition across both retail and institutional segments underscores the success of their strategic initiatives. The first quarter was a standout quarter for new client acquisition. Retail trader additions for the quarter up 44% year over year, with 80% growth in North America, 26% in EMEA. Our new to futures brokers contributed nicely to our retail acquisition. CME Group is delivering increasing margin efficiencies for market participants. This is what we talked about, volumes and cost effectiveness. Something else I want to highlight here is new products. CME Group continues to innovate and leverage the powerful characteristics of our business model to create new liquid markets for our clients. 1 ounce gold futures, launched and announced pending regulatory review. Several new product offerings during the quarter and to date in 2025. So among those, we have 1 ounce gold futures. Think about the hottest story in finance right now. It's the price of gold per ounce. Mortgage rate futures, expanded natural gas weekly options to Monday to Thursday expiries. Cross-currency basis futures, platinum, palladium, Friday weekly options. Number 1, busheling ferrous scrap options, physically settled ethanol. Expanded suite of weekly agricultural options on grains and oilseed futures. Now include expiry for every day of the trading week. How about this? Options on Bitcoin Friday futures. Solana futures and high yield duration hedged credit futures. Bloomberg commodity sub-index futures and physically delivered hard red spring wheat futures and options. I mean, there's a lot. I don't even understand what half of that means, okay? I really don't. But the idea, I mean, I know what ethanol is, I know what palladium and platinum are, right? But you get the idea. There is a significant amount of new product innovation coming on. Some of this, which seems highly relevant to the market demands of today. Of course, what did I say about the gold price? You see all the retail additions here. Meanwhile, we have 1 ounce gold futures. The network effect that we've discussed in the prior analysis, the network effect appears to be trending very, very strongly. Um, so market signals remain strong in the current environment. While we have seen peak volume days, the level of trading has been consistently higher. And then we see here annual trading days of greater than 30 million contracts. So again, that 29.8 million average daily volume is exactly that, an average daily volume. Whereas here, this measures in the given year how many days there are with greater than 30 million contracts. This is quite the chart because we're seeing here 2025 to date. So probably up, up to yesterday or the day before, right? So a little bit more than the quarter, but about a third of the year, we've had 32 days. So multiply that by 3 is 96. So that is significant growth over the prior year. So this right here is a chart that reinforces the thing we've discussed here, which is the network effect. And then we have here of the top 10 trading days since 2013, 1, 2, 3, and 4 have been this year. In fact, the top day in history since 2013 occurred on February 25th. And then 2 of the other remaining 3 days occurred in February. You see here, April 4th, very, very notable day. That was a day where the stock market sold off significantly, if I'm not mistaken. So we see a lot of activity here. And then here, aggregate interest rate, large open interest holders remain near all-time peaks as market participants turn to our markets to manage uncertainty. Again, lots of uncertainty and activity around interest rates in the last few quarters and particularly in the last few weeks. So, I mean, look at this strong volume, year over year ADV growth year to date across asset classes. Again, what we're seeing is signs of stagflation expectations. That's my color added to that. And then we have our dividends paid. CME Group and S&P Global announced a definitive agreement to sell Ulstra to KKR, the leading global investment firm, for a total enterprise value of $3.1 billion. Proceeds will be divided evenly between CME Group and S&P Global for a 50-50 in the 50-50 split that they have. Okay, so notes and guidance. This is important. Full year adjusted operating expense, excluding license fees, but including our investment related to the Google partnership, expected to be $1.65 billion. Full year capital expenditures, net of leasehold improvements, allowances, expected to be approximately $90 million. Adjusted effective tax rate, expected to be between 22 and 23.5%. Unchanged. So they were already guiding to a strong year, and they expect to hit. This is more granular detail that I'm not going to look at. I encourage my viewers to look at it and draw conclusions from that. But I think we get the gist when it comes to the volumes and the numbers. So now what I want to talk about is the performance. What I want to talk about is the performance of the stock. So we see here over the last year, again, we made our video on this about a month ago, I believe. Maybe it was several months ago. We only wrote our article a month ago. Either way, what we see here is a significant divergence here. Again, February 19th was the day that the current drawdown in the S&P 500 started, and we do see a divergence occur. Now, you still see positive correlation, it going up and down generally on the same days. However, there is a significant divergence that appears to have happened at a certain point. We see here, this looks a lot like the chart of RSG that I covered a few weeks ago. We see here again on that date a divergence. The stock market starts to sell down, whereas CME continues to have very, very strong performance. Another thing to note is on Liberation Day, CME went up by over 2%, whereas the S&P 500 sold off by almost 5%. And then the following day, all assets sold off. So that is a huge contributor to outperformance there, is just those 2 days. And what I've seen in all the most quality stocks that I've analyzed over the last few weeks is that they're just tended to trade up on this day and then down on this day. And I think if we extrapolate that out to the beginning of April to today, we get an idea of how that's translated. You see this initial bump here, and that is a 6-point difference here, right? That's a 6-point difference, and that has almost held into here, converged somewhat. So some of the constituents of the S&P 500 have, performed more strong in this kind of bear market rally, what I would call a bear market rally. However, the company has what I would say, outperformed pretty handedly in the days since Liberation Day. So think about that for a second. What we've talked about in the prior video, what we talked about in the article here, and again, just side note, if you don't have Seeking Alpha Premium and you would like to read in depth all of my analysis, I offer to my viewers the ability to purchase a Seeking Alpha subscription at a discount, and the link is in the description. But anyways, one thing that I highlighted in this article was that it has defensive properties relating to their ability to monetize volatility. And I think it's pretty easy to say that they effectively did that in the first quarter. Now, one thing to note, again, going back to our numbers here, I think it's reasonable to assume that I don't know for sure the ending of their first fiscal quarter, but if we assume for a second that it was, January 1st through March 31st, right? The biggest periods of volatility occurred after that. A lot of the biggest volatility occurred after that. So they started to see an influx of activity prior to that, positioning ready for the event, getting positioned for Liberation Day, and whether groups covered their positions or rotated into new ones. I think it's fair to assume that the upcoming quarter that we will see in July, when they release the upcoming numbers after these, will be even stronger. Okay. So where does this leave us? Where does this leave us in terms of how the outlook is shaping up? Let me just bear with me here while I draw lines like a true artisan. Here. We recently hit our new all-time high. The long-term trend, the trend that has been going up since July has held, and the stock did sell off, as all stocks did, in the way that we showed you on that last chart. But the long-term trend is intact. While I do expect equity returns to be muted compared to what they were the last few years in the go forward over the next year, we're not going to have another year of plus 20%, in my opinion. But who knows what'll happen? Okay. If I knew what was going to be if I knew what was always going to happen, I would be a billionaire, and I'm not, sadly. So, but what I'm attempting to communicate here is that everything looks good here. Long-term trend is intact. We bounced off that. We're firmly in the middle of this ascending channel. And if price were to break out into a new, consolidation sideways, then it might be reasonable to assume or to estimate that it would roughly take shape from the 250 level to 275 or so. So all signs are looking very conducive to continued relative outperformance of CME Group stock. In fact, I graded it a buy a month ago. Nothing's changed. I would reiterate that rating here today. Also, on the quarterly earnings and on an adjusted basis that we calculated, it's priced at 20 times, just a shade under 20 times forward earnings. And if this volatility and these market conditions persist throughout the end of the year, we could be looking at a record variable dividend at the end of the year. But though I don't want to speculate on that. That would just be icing on the cake. So very, very strong underlying business performance. And if anything, the stock price movement has been strong, but not even as strong as what we're seeing in the underlying business. So I would, my opinion on this, I have downgraded several companies that I've looked at in these last few videos. I downgraded Otis, I downgraded Carlisle. This company, I will not do that with. I think what we're looking at is a very strong business in the current market conditions, and the outlook is materially stronger for this business than it was before the world was thrown on its axis with Liberation Day tariffs. So, as always, the disclaimer: this is not financial advice. Please do your own due diligence. These are my opinions, and I am a self-taught analyst. All right, so please form your own opinion about this. But from my point of view, from what I'm looking at, a very strong performer here, and I do expect relative outperformance versus the index to continue for at least the next few quarters. And if anything, the worse things get in the markets with more volatility, it is conceivable to think that the underlying business of CME might do even better. So I reiterate the buy rating here and feel very confident about the strength of this business, especially in light of the current climate. So that'll conclude our video today about CME Group. Hopefully you found this helpful. If you have, be sure to like the video or consider liking it, and leave a comment. Let me know how I'm doing. Let me know, anything I missed or what I should be looking at. Definitely would love to hear your feedback. And again, like I said before, we're really starting to edge up in subscriber count. So I'm really thankful to all my viewers out there. It's a pleasure to serve you by doing these videos and writing these articles. I'm truly passionate about it, and hope that I'm adding value to you as I go about my own journey in navigating these crazy markets that we have out there. So anyways, it's been good, and I hope that you continue to manage risk in the current environment, stay safe out there, and make good decisions. So hopefully you found this interesting, and I'm going to move on to the next earnings report to cover, which I will also upload shortly. Thank you, and bye.